Hey everyone, welcome back. Welcome to Decoding Markets in 3 Moves, a quick and easy way to understand what really makes market tick. No fluff, just 3 simple moves to help you spot trend and make smarter decisions. And joining us today is Mr. Rohit Srivastava, a market pro who's got tons of experience in breaking down complex stuff into easy insights. So let's dive in. So, welcome back, sir, to a new episode of
Pleasure,
Decoding
and
Markets.
good to see you're on a good connection today.
Yeah, today I'm not in a
And,
buffering
and,
mode.
and I'm having walnuts for the brain. If anybody is wondering what am I chewing,
Yeah, it's good to have a good, stable internet connection after so long in Bangalore because it was a rainy day and it's pouring
wait,
down.
acha, no, so Bombay was a rainy day yesterday. It was flooding yesterday.
That's a
Today
different.
is today is more just panic and no rain. So
So,
it's pouring
so
like crazy out there.
no, it's not pouring like crazy. It's a normal Bangalore weather. I'm wearing a sweatshirt. So it's that thing, a normal day in Bangalore.
Okay.
So it's been 2 days. It's in 3 days. Sorry, it's the market is closed now. So it's been 3 days in the market. We are in the mid of the week.
Hmm.
So how's been the market?
Pretty good actually. But slow. I mean, yesterday also we gained only 30-40 points. Today it's like 70 points. You're not even gaining 100. But surely we are gaining a bit. We still very hard to say that uh, we're out of the woods. So let's see.
So your opinion actually leads me to my first question for today. In the recent uptrend in Nifty and Sensex, is it sustainable, which has just broke past the psychological barrier of 25,000 points, or is it at risk of reversal due to global and domestic factors?
So there is still a risk of reversal due to global and domestic factors, not completely ruled out. Uh, it had become a very oversold market due for a bounce, and we kept saying that and going wrong for a couple of weeks. And now that it's fallen so far and bouncing, we are feeling less confident that it's ready for takeoff. Uh, or at least I am. Like, we is not the right word. But the whole thing is also stock specific because some stocks are really doing well, irrespective of the fall in the market. And then there are other parts which are not. But when we talk of the market, we only talk about the index. So in a way, if you have picked well, then this market has been very good to you on the long side. To just give you an example, the post this whole Trump thing, the 4 or 5 stocks that I identified are actually up on average, if not all of them, at least three with two delivering most of the returns, uh, resulting overall in a portfolio gain in a down market. So I'm sure if I could do that, a lot of people could do that with some basic numerical analysis and chart reading. The hard part has been on the Nifty only because the Nifty was falling even when stocks were going up. Then stocks also fell a bit. Now again, when the market is going up, some stocks are strong, like auto sector is very strong. But when we purely look at the index, I look at okay, now US market is like it has been going up non-stop since April. So it is getting further and further to a point where, as you mentioned, will our market fall due to global and domestic? I think that the global risk, which was not there, will slowly start showing up, and specifically US. I mean, see, it's not across the board, but specifically key US indices will now show some pressure, and that could rub off if at all. And our problems, which were mostly related to tariffs, Trump, and the earnings slowdown may not go away even till the October quarter results, and therefore you don't get that leeway across the board. So, but I do think that everything that is being done, from interest rate cuts to GST reductions to government spending, etc., will all eventually result in a prolonged growth phase going forward. We are seeing outperformance in growth in mid and small cap relative to large cap. So if you have a view which is more than 6 to 12 months out, it's a great market to be investing in. But if you're trading for the next 1 month, then I can't say that you're out of the woods. That is the perspective. 1 month, still not sure. 1 year, damn sure.
It's pretty good in 1 year.
Yeah, 1 year, anything good you buy would be up, and that definitely doesn't mean IT sector. I mean, it could be up, but I wouldn't buy it. But yeah, if you buy that, so anything that's growing, which is not difficult, you just check the earnings growth trajectory and go with it. You'll do well.
So this growing mindset that people have कि थोड़ा सा पैसा डालो, that money will be double in no time. Here comes my second question for today's episode is IPO. So what is the outlook for the next big IPO, and how is this, like, their subscription status impacting broader market sentiments?
So there are a couple of different ways in which we see IPOs. Uh, for some initial investors in the old days, IPOs were the only way to participate. So when you actually don't own any shares, some people used to find IPO an easy way to start participating, because you buy a stock that's at, like, it would be like, oh, it's coming in at 10 rupees face value, so it's a good way to get started. That you can buy something new, buy it cheap, and then grow with the company as it grows. That concept doesn't exist anymore. Now IPOs are more like for a lot of people, it's just a trade. Apply for the IPO, there's a lot of demand, and sell it on listing. So it's like a lottery ticket. Lag gaya to lag gaya, nahi laga to next one. But the IPO market is also an indicator of the health of the market. So when the market is very healthy meaning when demand is high, liquidity is high, then you also get more number of IPOs. You see oversubscriptions in IPOs, and therefore a lot of liquidity flows in through IPOs. But technically, some people also will argue that if money goes into IPOs, it's going out of equity, and that is why equity nahi chal raha hai. Because it's the same money that you could have invested in the secondary market. Now it's gone to the IPO, and therefore the secondary market is not getting that that liquidity, and therefore the market is sluggish. It's true at certain points of time, and it's not true at certain points of time. If too many IPOs come in, it is true. So as a market keeps going up and up and up, more IPOs come in to raise money. And then when they raise too much money in a short period of time, they sort of suck out liquidity from the market. I don't think we are in that phase now. 1 year ago, there were a lot of IPOs. Right now, there are some, they're doing well. But it's not like you have a barrage of IPOs going on. But again, IPOs generally reflect, see, if markets are good, only IPOs will come. So it's a reflection of good health. In a bad market, you'll find no IPOs. All the IPOs will run away because a bad market means that the price you're getting for your stock is less, and then no promoter wants to raise money at a less price, and so they all postpone the IPO.
That's true, because there is no liquidity in the market. The market is going down. How can they make money from the IPO itself? So yeah, that's a valid point. Yeah.
But does that mean
This.
investors should invest in IPOs? It's a different question.
So what's your take on IPOs? What's your lookout?
So I did the old thing in 1993. My first investment was an IPO, and that was my last IPO investment.
That was the first and last investment on the IPO.
It was my first investment in the stock market personally. Prior to
Okay.
that, it was probably just managing or looking at what my mom was trying to dabble in. But my first personal investment from some money I got from somewhere was in an IPO. I still have the share certificate of that IPO, but that was the last IPO investment. That means I never invested in IPOs ever again. Because the learning is that, and at that time, IPOs mostly were fresh public offers. They were not like, which means a company that is just getting created. It's almost like investing in venture capital. And most companies went downhill and shut down. So the learning was that it's very high risk. Not every businessman that thinks he'll start a business will do well. But the IPOs often get listed at a higher price because of the demand for that particular sector or so on. Like in those days, it was steel, cement, all this stuff used to keep getting listed. And if you're setting up a factory that will go live in 4 years, the stock got a premium. But that's not necessary that you'll make money over time. In the short term, maybe if you just sell it on listing, but if you try to hold on for the long term, it might result in nothing. So then investing in an existing business is better if you're not willing to take that type of risk. Now, most IPOs that come to the market are existing businesses. So, in that sense, the risk is much lower than before. The only judgment that you have to make is valuation because the game has changed. Earlier, the game was you could get a 10 rupee stock through an IPO, so you could get it cheaper, just like in real estate. You could buy a new project cheaper if you rather than buying a resale home. Today, if you buy a resale home, it's cheaper than buying a new project. Same way in
Right.
the IPO market, the IPOs have been overpriced and made super expensive, whereas an existing company in the same business could be cheaper. Okay, so and as you mentioned, Zomato, the biggest critical argument against Zomato was it's overvalued. Stock got listed, went up for some time, and then collapsed. Of course, eventually it has turned around its business and delivered. But just making a point that many times stocks listed on IPO can lose you money unless you're just selling it on listing. But if I have to invest for the long term, then I would rather let it get listed, let it be around for some time, a couple of years, and then come back to it and see how it's doing. Especially after a bear market. So let a IPO stock go through a bear market. Let the market decide its true value rather than the very rigged up value that investment bankers will create for you by trying to sell you a story. And then if the market believes that story, then you buy it.
So it's very true that we are speaking in a valuation term. So what happens, like every company tries to just hike their valuation in such a term that they get more and more money.
Yeah, surely
And
because
this
there are early
valuation,
investors who want an exit. There are early investors that want an exit, mostly venture capital funds and the promoter himself who wants to reduce his stake a little bit and get some money for his hard work. The promoter part I understand. The VC part I both understand and don't. I mean, surely they also have money that wants to earn, but the valuations that are often commanded are not reasonable.
but that brings to one of the very concerning questions. Are the valuations on which the shares or the IPOs are listed, are they really gonna make, like, this is kind of something getting pumped up like a bubble, but there is nothing, there is just the valuation is out of thin air somewhere.
No,
The if
no, no. So they make some justification. They
Mhm.
make some justification. I can't say it's thin air. It's based on some future expectation. Uh, and those future expectations may or may not be wrong. It's just that we cannot always estimate the time that it will take to get there.
Right.
In Zomato's case, for example, it took 3 years to get to profit. In the interim, the stock dropped. That is the excess that we got out of it.
This brings to the last question, sir. That is the third question. Is there any significant movement in commodity prices or currency markets? that could have downstream effect on stocks?
So lots actually at a very macro level, not on a day-to-day basis, but in the medium term. If you have, for example, a weak dollar environment, it's usually good for liquidity, good for commodities. Now, if you have a strong commodity market, then it's good for the entire commodity sector, and it also reflects on the business cycle. Uh, but right now, we are not seeing much of that because all the ups and downs have been in only copper prices, which is probably one of the more volatile base metals. But others like aluminum, nickel, zinc have just been lying low. So you're not getting what we call an across the board metals rally. If that was true, then the commodity stocks or metal stocks would have done really well. They have done well. It's not that they haven't done well, but they could have done much better if we got an across the board commodity rally. So far, it's only been copper prices going up and down, up and down, up and down. Now, somewhere Indian stocks have done better because of domestic metal demand, specifically in steel, due to the construction and other and the capex that is going on. But otherwise, usually looking at global prices, like steel prices have really not moved globally. If they do, that definitely adds a huge fillip to the returns you can get in that sector. So, and it also reflects demand because if commodity prices are rising, that means the demand environment is pretty strong.
Yep. So today, I have a bonus question for you after this. So it's regarding your personal finances and just an advice to the younger generations that's just has entered in the market and have started the investment or trading journey. So what key advice do you give to the younger generation for managing their investments and navigating the markets successfully in today's fast changing financial world?
Yeah, I think I was talking to someone the other day, and I thought I would give you a very different answer to this type of question. But there's also something more to add. The funny thing is, compared to the time when we were born, when money was not abundant, as we say, uh, I think you would. I mean, even in a good job, the salary would be hand to mouth. So therefore, saving and investing was a very critical thing. We thought saw it as a means to really break free. Today, because when I say money is abundant, what I mean is that if you graduate or you do a postgraduate degree, you end up getting an MBA, you end up doing a diploma in design in various fields that are done today, you easily end up getting a good salary. Okay, in most cases, that means money is somewhere slightly abundant. Okay, and what happens is then people don't pay too much, don't end up giving too much importance to investing. They feel chalta hai, it because it suffices to meet your needs of not just expenses but maybe eating out or uh, we wouldn't do that very easily back then, but now it's like very easy. It's like let's go and have some fun once you got start getting paid. The problem is we don't know when that will catch up because these are just cycles. When inflation catches up with income, then suddenly that changes. So investing is very critical, not just to create wealth but also to stay on top of inflation, that it doesn't reduce the value of your money that you are saving, and creating that long term wealth which eventually helps you in doing much more with your life than just the day to day fun part of it, is then the need of the hour. So a good percentage of your money should get saved into investing. And the good part is that young people, as you say, can take much more risk, and they should. Okay, because there is no other way to uh, both learn and get higher returns. Higher returns don't come without higher risk, so some higher risk is required. But also, the learning curve doesn't happen unless you actually get your feet wet. So, participating in the market and learning, that is one part, and getting a good education on investing. Fortunately, today a lot more investment education is available both online and through courses that were completely unavailable at the time that we started out. We had to learn everything on our own from scratch, from books. It was, you just couldn't go online and start getting gyan. So educate yourself and take risks. I think very important to start having a vision of where you want to be 10 years from now, 20 years from now, what things you want to achieve, what goals you want to get to, and start saving accordingly.
Thank you, sir. That was a good piece of advice for everyone over here. So that was it for today's session. So let's move to the questions asked by our subscribers. The first question over here is from Sagar.
Can you share wave counts on gold BTC? Can we say that BTC has entered ABC correction on daily time frame? Yeah, it has entered a correction, not long term but medium term for sure. I have written a post on BTC. If you go to Indiacharts.com, so if you just go to the site, there are some posts that are free. BTC is usually free. Just go to the site, okay, and we usually don't talk of India charts, and go to latest. You'll see this is the latest Bitcoin post. Yeah, it's 10 days old, but it's still true. Okay, maybe I've not updated it, so I should. Where we are right now is, I thought I did write an update. Let me see. I'll have to check. Or maybe because we discuss it in Weekend with India Charts and all. Maybe I discussed it somewhere that BTC is. So okay, I didn't, because I was a little unsure. I was a little unsure as to how deep this is going to get. So you see, this is what has been going on. There's a lot of wave counting. Let me just highlight it. This is one 5 wave here. Okay. Now this should have ended. Then we are trying to think whether this 5 wave is going to extend into 9 waves. Now I don't know. We haven't gone far enough so far. And I try to think, okay, this is impulse 1, 2, but this is not so clearly 5 or 3. Is this all just part of 1 and 2? Okay. Or alternately, I'll have to think that this is A, this is B, this is the C coming, and then only your correction will be complete. Not sure. But yeah, I think it's fair to consider that some kind of a corrective phase is going on. The weekly RMI may go into sell this week. That would be one interesting thing to watch on Friday. If that happens, it would indicate that yeah, we are getting this some cycle degree correction at least. So that could happen. Gold and silver also entering corrective phases. I've written about them today. Okay, but you won't see it here. You have to log in to see that post on gold and silver. But gold has been making this triangular pattern for very, very long. Okay, and we're trying to judge whether it's ending 5, whether it's a continuation triangle, ending triangle, and I've gone back and forth. But once again, I'm trying to consider that can it be an ending pattern? But it's managing to hold both sides. So let's see. We're not getting a clear confirmation, but till it doesn't break out of the top end, it can be ending 5 waves from the bottom that we made somewhere in October of 2023, and something similar for silver as well.
So moving to our next question is from Mahesh.
Yeah, so when the market is in a major downtrend, then every time it gets overbought, sort of sells off from there itself. But in counter trend, sometimes in a stronger market, you might get divergences before that happens. Even on this fall, market was falling into the 6th week. You got positive divergences in the swing before we actually turned up, and pretty big divergences, like bigger than what I've ever seen. Now, same way on the top, we've reached 91, 92 2 days ago, yesterday maybe. Market still going higher. So I'll wait for a divergence. It's possible that the Nifty does continue to 25160. Why 25160? It's 61% retracement of the entire fall. And then over there, if it does turn down and there's a negative divergence in the swing, we might have a setup for a possible short if this is a counter trend bounce and it's ending over there. So that's what we'll have to watch for. It's not yet happened, but that's what you need to watch for.
So moving for the next question is from Twitter. So
Where do we see USDNR in the next 6 to 12 months? So right now, my thought is it will be lower, not higher. In the short term, it could be under pressure to go up, but it's already started to weaken. So let me just share the chart. Always makes sense to explain on a chart. So USDNR actually went down and up both in corrective style. Like this was a complex correction. This whole rise is inside a channel. I published this channel some time back. We touched the top end of the channel 2 days ago. I was not sure. I thought there's one last leg left, but that didn't happen, and now it's falling. Now, is this really a counter trend move which has led to a double top? If yes, then it should be much lower. The reason I'm saying I don't know if there's any further upside in the near term is because the dollar index is still looking like it can make one more pitch higher. If that happens, maybe you see one more leg attempt to go up. Then this whole pattern can also become an expanded flat. But I think eventually the dollar's headed much lower, and that is why I think USDNR would come under pressure. But it could be, I don't know. These things are changing, evolving as we go. So I'm taking it step by step. When we started to move up here, initially I thought it's bearish here. Then it came down here. I thought, okay, it'll do ABC. It turned bullish and went up. Now again, I'm thinking it will come down. And if something changes, then I will turn up again. So I'm being pretty open because when we go to the weekly RMI, it's still bullish. When I go to the monthly RMI, it is about to turn bullish again this month, even though it's slightly down. And it's holding above the 20-month average. It hasn't broken that since like 2-3 years or 5 years. I don't know how long. So when it's holding that, keep on going up, going up, going up. It's hard to say that USDNR will be in a downtrend. Even then, I thought the fifth of some degrees over out here. And I've been trying to attempt that it comes down, but we'll see.
moving to today's last question for the session.
So I didn't exactly understand the point, but yes, debt funds. If you're trying to in the short term, if interest rates move a lot, debt funds can give both losses and returns. That I remember way back in 2002, debt funds gave almost a 30, 40, 50% return, and the Nifty was doing nothing, but interest rates were falling. So people felt very happy to have invested in debt funds. But that was the last of it. After that, it was all equity, equity. If you didn't invest in equity, you wouldn't make so much. But yeah, I mean, if it's a newcomer, first of all, I never invest in funds. So a blue chip fund to no volatility. Well, a blue chip fund would be very diversified. Would I say it's volatile? I wonder, because it's just like buying Nifty. And Nifty actually is not the most volatile. I mean, it's volatile in up down day to day. But when you see a 1 year return, we have not seen anything like volatility. I have seen more volatility than that in my lifetime. You have to go all the way back to Y2K, and then you have to go into even after that 2001, 2, 3, that bull market till 2007. In terms of monthly percentage changes in index, much more than anything we see today. So but I do believe in direct investing. I mean, so when I said that young guys should take risk, they should learn about direct investing in stocks. You can't learn to do that at 50. Learn to choose good investments, find good stock ideas when you're 20, because then that will go a lifetime. As your income increases at 20, you may not be earning much, but in that small income, you'll learn how to find good stocks. By the time you're earning more at 30, you'll buy the right stuff. It will create wealth for your 40s and 50s.
You're,
So,
you're telling the roadmap.
yeah, because I don't invest in mutual funds. I haven't owned a mutual fund in my life except once and that also for gold mining stocks in the US. So it was not even because until I opened my US account, and then I buy the miners directly. I don't really buy a fund because I found the fund also underperforming. So I was owning the DSP gold fund. I am like, gold stocks went up 2x. This fund is not even just up for 30%. I mean, this is not funny. It was supposed to move up a lot more relative to gold. So when gold prices went from $1,000 to $1,300, that's like 30%. The gold miners would have gone up 60%. And the gold fund is not going up that much. I mean, I felt that they were probably misallocating or not buying the right stocks or whatever it is. It's better that I buy two good gold miners. It would have given me a better return than the gold fund itself. So, so that's why I rotate back to being able to identify individual stocks yourself. It's not as difficult as you may think. It's not that, oh, I need to know all this gyan about balance sheets. You need to know some things, but it's not like don't
Entire.
have to be you don't have to be a financial expert to buy good stocks. I'm just telling you that, or to know which is the next sector that is going to do well. It's not a rocket science. If you're reading the financial newspaper every day, you would have come to know at some point of time in 2021 that or 20 that green energy stocks are hot.
Hmm.
It's not a rocket science.
So
And there are endless such examples. I mean, it's never a rocket science. What are
yes,
the
yes,
sectors that will do really well in the next 2 years?
yes. So that's it for today, sir. It was all done, like the questions and answers. But yes,
One,
I would.
sorry to Sunil who's saying Hindi mein bolo. But sir, is this meeting open for normal subscribers? ये क्या बोल रहा है पंकज? Of course, you're in this meeting. Which meeting is he talking of?
He's
But
talking about this meeting.
but yeah, I mean, see, we are doing this in English. तो मैं हिंदी में बोलूंगा तो सबके लिए सही नहीं है. But yeah, I don't know. अगर सवाल आता है हिंदी में तो मैं हिंदी में ही बोल देता हूँ. But सवाल भी हिंदी में आना चाहिए.
Yeah.
It's up to Shubhajit to push me into Hindi mode.
It's again. I'm gonna say one thing to all the subscribers who have joined over here. Please,
See, Mahesh has a question. Sorry, I'm answering some questions just randomly.
sure,
But he's
sir.
saying, is a risk of persistently higher inflation in the US? Not persistently, temporary, because tariffs will cause a inflation spike only for a few months. Okay. And that is what Powell is worried about. But temporary inflation should not be a worry. I remember him using the word transitory. When inflation was shooting up due to excess liquidity, it was not transitory. And you can even say 9% inflation is transitory, but that doesn't mean that if inflation is going up, don't raise rates. So the opposite of that is also true. If inflation is coming down, you have to cut rates. Yeah. If it comes back up, raise it again. But to sit still and say, I know how inflation is going to move, it will come back up again, so I won't cut. And then when it comes back up, you say, see, I was right, and then you don't cut, and then it goes down again, then what will you do? Then will you say it's going to stay down? Well, it's not going to stay down. So it will eventually come back. Nothing stays in one place in finance. So I really don't get it. Just like Trump doesn't get Powell, I also don't get Powell. But I don't get Trump either, so that's different. I mean, I think I get him, but I think I don't like his style. Like being too rash and blash and causing markets to go all over the place. That part I don't like. Otherwise, I know what he wants to do, which is not bad.
The main aim is good, but the execution process it's bad.
Yeah.
There was one question
Sunil
from
says no email reply in 12 months. पता नहीं कौन सा email ID को डाला. If you write to indiacharts@gmail.com, I reply to everybody. That is my personal email ID. बाकी किसको email डाला आपने? Unless it goes in my junk folder. No, that I can't control. Some of the emails people send me automatically, Gmail puts it in junk. I sometimes notice them later on. But yeah.
So I want to answer one question over here to Abhishek.
Hmm.
So Abhishek, you can just reach out to us on the contact number which is given on Strike. So you will get the recording of the Zoom session that was held earlier for the
No, so
email training.
he's talking of I think he's talking of a session which Chavan made me do last time on YouTube.
Yes. So
I
it was with you and Rahul, which you
तो
had.
recording है उसका.
Yes, it's there.
It's live on YouTube.
No, it's not live on YouTube. It's there with our team. It's only for the like if they wanted, we can send it to
That
them.
is why. So later after the session, people couldn't see it. So I thought maybe it was just in the live. So yeah, sure. Anybody who's interested in watching that session, write to who should they contact? Rahul.
Rahul. They should contact to Rahul. The contact number is given in the our
On the
Strike
Strike
platform.
website. Yeah, just
Yes.
go to the Strike website or whatever the contact number is. If you call them, they'll send it to you.
Yeah. You can have the entire recorded session on email.
Or
So
send an email to rahul@indiacharts.com.
yes, you guys can do the same. So that's it. Thank you for
Okay.
joining in, everyone. Let's meet on Friday, same time, with new set of questions to just ask sir to decode them. And yeah, don't miss out on our mentorship program. Just have a look on our mentorship program. Log on to www.indiacharts.com and you can experience the best mentorship ever for the share market. You can start from the beginners to all the way to the advanced level. That's it. Thank you. Thank
Thank
you
you.
everyone for joining. Thank you, sir.